Ladies and gentlemen, welcome to another edition of Mwango Spaces. We have a topic on affordable housing solutions for the Kenyan diaspora. We have three able speakers who are going to guide us through this very interesting topic. I'll start with Flora. And maybe Flora, you can introduce yourself and where you work at. And then, hey, Stella can go after you. And then Shadrach, if you love, join us. Tell us a bit about what you do and what you do in regards to affordable housing solutions.
Thank you so much, Mokaya. My names are Flora Muthaura. I work for Kenya Mortgage Refinance Company in the capacity of Head of Risk and Compliance, and also supporting the company to implement sustainability ESG.
What's been your journey to KMRC?
I'm clocking 4.5 years. I joined KMRC in the year June 2020 when the company was setting up. And it was a time when it had not received its license. My main task at the time was really to support the company in having the right policies in place as per the regulatory requirements and really working hand in hand with the rest of the team to ensure that we get an operating license. It's been smooth all the way, a bit of hurdles here and there, just like any other organization. When we got our license, we embarked on a lot of capacity building for the market and basically just creating awareness about this new outfit that is coming to create a disruption in affordable housing. It was the first in the market, a company offering fixed long-term liquidity to financial institutions and also being aligned with the government mandate of affordable housing. We had quite a journey to create that market trust that it's a product that will work and it's actually available for all Kenyans to access. So since 2021, we were able to do our first disbursement around February 2022 to 4 financial institutions. And from there, it's been really more of partnering with these primary mortgage lenders. These are banks and Saccos, to be able to create that awareness and, of course, extend this financing to Kenyans to enable them to own homes. It's really been an exciting journey, and I think it's been fruitful. It's really fruitful and rewarding when you get to create that impact in the market of enabling Kenyans to own homes. So that has been my journey in KMRC, and we continue to progress further to implement various initiatives as we see the company take on the next stage of growth. We've moved from the nascent stage where we have to set up the company and operationalize it. Now we are moving to the growth stage. It's been an exciting journey for me, and I'm really looking forward to more initiatives ahead as we continue to develop the market. Thank you.
Stella, maybe you could introduce yourself. Sure.
Thank you. Thank you, Mokaya. Good evening. Good morning from where you are tuned in. Glad to be here this evening and packing the homeownership journey in the diaspora. So my name is Flora Muthaura, Head of Mortgage Business at HFC. I have experience in real estate lending and diaspora banking. I'm responsible for building a profitable mortgage business that offers the best solution in the market to our customers, both locally and in the diaspora. This has been exciting for me because when you find that somebody is owning a home and a home is a very emotive product, it gives me joy to be able to see someone moving into their house. This background that I'm actively involved in supporting diaspora customers as well as the local properties back home. When we say diaspora customer, a diaspora customer is anyone who is outside Kenya. It could be in Africa, any African country. It could be in the US, Asia, or wherever you are. At HFC, we are able to support you to be able to own a property back home.
Thank you, Stella. Shadrach from Steamer Circle. And here, so perhaps I'll proceed a bit with the two speakers we have, and then I'll come back to you. Seems like you're having challenges connecting. Slow now. Back to you. You could tell us a bit about some of the affordable housing solutions. I know you talked about the 4-year journey that you've been on, and to imagine that you've been in one place for 4 years must be a good place to work at. You can tell people a bit about the features of the affordable housing solutions that you offer at KMRC.
It's really good to educate the public on who KMRC is in the first place. So the company's primary mission is mainly to provide affordable long-term funding to financial institutions. It is also a financial institution itself, and it's non-deposit taking. So when you compare it to a bank, we don't take deposits, but we are regulated by the Central Bank of Kenya. The main objective was mainly to support banks to be able to access long-term funding. Previously, home ownership in Kenya was such a distant dream for many, and particularly the average Kenyan who's looking to buy or build a home. While mortgages were actually there, They were quite expensive in terms of variable interest rates. You could find a situation like right now, the unsecured rates are going up with the CBR being revised. And when the CBR is revised downwards, you find out there's a bit of time before the rates go down. So mortgages were actually operating the same way. So KMRC came now to create that disruption and address that need in the market of providing long-term funding to these financial institutions to be able to extend the same to mwananchi. As opposed to previously where banks relied heavily on short-term deposits, they now have access to long-term funding. And this funding is actually fixed for the entire duration of the loan that we give them. So the same is extended to borrowers and also single-digit interest rates. The funding we get is from development financial institutions, and it's actually a sovereign debt. And this is intentional. It was negotiated by the government in order to make it affordable to KMRC and eventually to primary mortgage lenders. We get this funding at 4.5%. We add our margin, just 0.5, and we're able to extend this to financial institutions at 5.6. And when you look at the different products that the financial institutions have created, they actually range from 9% to 9.5%. This is something that was not there before, and it's very affordable considering that it's extended up to 25 years. The good thing about it, the interest rate is also fixed, so it gives the borrower the predictability of income. So as opposed to before where interest rates were variable, today when you take a mortgage rate, for example, housing finance company for 2 million, for example, you're able to pay around 20,000 for your home, and that 20,000 is fixed for the entire duration. So you're able to even do your financial planning more prudently, knowing that your home is already catered for in terms of monthly repayments. So we operate by refinancing the mortgage portfolios that the primary mortgage lenders advance to borrowers, and all our lending is collateralized. And that's why we really take a low margin to be able to pass that benefit to the ultimate borrower. So this approach has really enhanced liquidity in the housing finance market, making home ownership more affordable to Kenyans.
I want to double click on two terms that you've used, refinancing and collateralized. So perhaps you can explain to a Kenyan what those two terms mean in the context of KMRC.
Refinancing means that when HF comes for funding today, we'll ask if it's 1 billion funding. Housing finance company is actually going to give us mortgages worth 1 billion. So we refinance those mortgages. The bank will issue mortgages to Kenyans and then bring that portfolio to KMRC to refinance. Ultimately, we are just providing liquidity to the primary mortgage lender in order to enable them to extend the same, and also addressing that gap of mismatch where they would previously use short-term deposits. So that has been addressed through the long-term funding that KMRC provides to primary mortgage lenders. The collateralized, it means that this portfolio, which we are taking from the bank, it's actually assigned to KMRC. So we hold it in trust as we extend the funding now to the bank. So the bank retains the title. So the collateral is basically assigned. It means that we lend against collateral. It's the same concept for mortgage where the bank lends against the property which they're financing. And until you finish paying for that property is when the bank discharges the property back to you. It adopts the same principle.
Stella, HF does work with KMRC. So maybe you can start by telling us a bit about HF. You've been in the news lately with the rights issue. You can tell us a bit about HF themselves and a bit about their journey and what your relationship is with KMRC.
Thank you, Mukaya, for that. And maybe what I can be able to start off is that HF Group was formed in 1965 with the aim of supporting indigenous Kenyans to be able to own decent homes and access facilities. We have 3 subsidiaries, and that's where the bank sits, which is now HFC. So HFC now an institution that deals actively with KMRC HFC was the first institution to access the money from Kenya Mortgage Refinance Company. We were the first institution to be able to develop an affordable housing loan that we are on lending to our customers. And one of our purposes is to be able to enrich lives. That's why we were able to quickly develop this product to be able to support as many to be able to own homes. And also now looking at also with our history where we are coming from, we were formed mainly to be able to support Kenyans to be able to own properties. So that's quick to adopt the affordable housing agenda. And you note that how KMRC was born in 2017, 2018, whereby the previous government came up with the affordable housing agenda. And the affordable housing agenda, also they went ahead to ask themselves, how do we support Kenyans? And one of the challenges has been that many people want to be able to own homes, but the interest rate becomes a hindrance for someone to be able to own a property. So that's how now KMRC, Kenya Mortgage Refinance Company, was launched to be able to extend concessional rates to Kenyans, as many Kenyans as possible, to be able to own homes. And what we've been able to do, we support our customers to be able to match that rent that they have been paying to be able to pay to a mortgage. You'll notice that sometimes when you pay a rent, that house is not yours. But by actually the instance whereby you pay mortgage, at the end of it all, the house becomes yours, and you know that a property appreciates. So that was the genesis, and that's how we came about developing this exciting product. And with the journey ahead at HF Group, we are looking at exciting solutions to our customers because we're in a growth trajectory.
Thank you, Shadrach, to give us the perspective of Saccos and how they have a relationship with KMRC. Seems like we're having a bit of challenges with Shadrach. So I'll come back to Flo. So in terms of KMRC and the loans they provide in terms of refinancing, what are some of the requirements that you need for people and a bit of a step-by-step process in terms of applying for a loan to KMRC? So if I want a loan, what do I do and what do I need?
We have different eligibility requirements for the primary mortgage lender and also for the end user. I'm speaking more specifically to the borrower, to the end borrower. And they just mentioned that you have to be a Kenyan citizen, whether you're residing in country or abroad. And when you buy the house, it has to be owner occupied. We don't have any limits on the income. However, we have capped the loan limit to 10.5 million, and this is across the country. The repayment period is up to 25 years. And we even encourage the PML to support Kenyans by advancing them financing of up to 105%. So when we talk about the loan to value ratio, we do accept refinancing of up to 105%. And this is mainly to support Kenyans who are not able to put up that down payment or afford the fees that come about with getting a mortgage, like the legal fees and the stamp duty.
Stella, so in terms of diaspora, what are some of the concerns when you deal with people in diaspora? What are some of their concerns about getting homes in Kenya? You have that nice meme of someone from diaspora sending money and then being told very often that their house is being constructed. And then when they come back home, the reality is very different from what they had in the imagination. So what are some of the challenges that you've seen in terms of Kenyans in diaspora, in terms of owning homes in Kenya?
I know for diaspora customers, it's a number of them. They have been called and seen that name that talks about the diaspora customers. And not only even for diaspora customers, even for the locals, they need to be aware about the full property ownership journey. Sometimes it tends to be complex. However, it's important for one to be able to understand the full process. So for us and what we do, and maybe what I recommend from where I see it is, for one, it's critical for you to be able to conduct a due diligence on the property to confirm, one, if the property is on riparian land. Riparian is whereby maybe the property is near a water body, confirm if this property is near public land on a road reserve. And I also need to ensure that we are able to conduct a search of this property to be able to understand who are the owners, what's the history of this. And then that thing that we encourage our diaspora customers also to have some of the pitfalls that we try to advise them to avoid, that they conduct a search to confirm if there are any encumbrances. When we're talking about encumbrances, we want to be able to know, is there any caution on that property? Is there any caveat on that property? has this property been transferred to the rightful owner? So it's important, one, to be able to conduct a due diligence. And how we support our diaspora customers is providing them a panel of valuers and lawyers to be able to support them in conducting all these searches, to be able to go through the land registry, to be able to confirm that this property does the encumbrances, or even to be able to confirm on the ownership. Then the other thing that we've noted is that a number of our customers, both local as well as diaspora customers, they do not engage professionals. It's imperative to be able to engage professionals. The professionals I'm talking about a lawyer, I'm talking about a valuer, I'm talking about if you're buying a piece of land, have you confirmed on the beacons of the property? We've seen customers buying a property, and when they go to construct, they construct on their neighbor's property, noting that they had not known where the actual location. Then that thing is, it's always visit this property. If one is able to spare some time to come in the country, or even to have a trusted partner like HFC. At HFC, what we do is, and to be able to maybe to support our customers, is we have our apartments that we are selling through one of our subsidiaries, and also we partner with reputable developers. When our customers are buying this property, are buying the right deal in the market. Then the other pitfall that I've seen in the market, and that one that needs to avoid, is you need to avoid being in a rush chasing a property. You know that a property is not a fast-moving consumer good. You need to conduct a search of this property to understand everything, the location, the map, and all that. Then the other thing that I've seen is engaging a reputable developer. And if I'm not engaging a reputable developer, the other thing I've also seen is that if this property is developed or is a property under construction, you've not confirmed if the property has the right documentation. Some of the right documentation is that you need to be able to know developers submit these developer approvals. Did they submit to the county governments to ensure that these are approved? And what we have done at HFC or at HF Group is to ensure that we are offering a one-stop shop whereby a customer can come in and they view some of the properties we have at our subsidiary, as well as the ones we have partnered with, some of the reputable developers, able to come in, view, and they choose the property they are interested in. We have properties that are in the towns or in the major cities, and all these properties, you'll note that as HFC, because we have our reputation, we ensure that we have done a thorough due diligence, and even going through the land registry to be able to confirm the search, the ownership, and even to ensure that we have the right documentation. It's imperative anytime that you're buying a property, ensure that you engage a reputable developer, due diligence, don't be in a rush, engage professionals. We have lawyers, we have valuers. Like at HFC, we have a panel of lawyers and valuers that we work closely with. And even we ask customers, they're not comfortable at the initial stages using the bank's lawyers and the bank's panel of valuers. You can come in with your lawyer, and your lawyer is able to conduct the initial searches to be able to confirm that this property is clean. So those are some of the pitfalls, as well as some of the solutions that we have at HFC to support customers in property ownership and to ensure they're buying the right property.
As you can tell, a lot of Kenyans try to avoid the professionals because najua mtu fulani, and then they end up in a lot of trouble. Very well put, that the importance of meeting on professionals. Do you agree, Stella?
Maybe I can confirm that on engaging professionals. I've said that a property is the most expensive investment you'll ever make in life. And since the property is the most expensive investment you'll ever make in life, it's good to be able to spend on that cost. The cost might be high. However, when you're able to spend a little bit on that, it saves you a lot in long term. In the short term, it might be expensive, but in the long term, it will be able to pay, noting that, yes, if you are constructing, you paid an architect, you paid a quantity surveyor, an architect comes up with the concept that you as a customer you have in mind, and a quantity surveyor is someone who comes up with how much each house will cost. If you're able to pay for these professionals, it will go a long way in saving you costs in future. And then it also saves us what we have been seeing, whereby we've seen buildings collapsing. Some of those developers that we've seen development collapse, to make shortcuts by not engaging professionals. So it's good to be able to pay, and you'll get a good deal in the market.
Flo, back to you again on the requirements. Perhaps you can pick them slowly, and then people can be able to understand exactly if people want their mortgage to be financed by KMRC, what they need to have at hand to make sure that they can tick the boxes.
Ideally, you must be a Kenyan citizen for you to access the KMRC mortgage. We don't encourage foreigners because this is a product that is purely structured for the Kenyan citizen, whether you're residing in country or abroad. Income verification, initially we had capped the income to 200,000. However, just recently we removed that requirement. So it's actually available to any Kenyan, no matter the size of income. And it's also available to whether you're employed or unemployed, both for the formal and the informal sector. This product was actually structured to promote home ownership. So we normally advocate that it has to be a residential unit. You may allow your relatives to reside in that house, which is still a form of encouraging your relatives to own homes. For the property value, the maximum value has been capped at 10.5 million shillings. And this is mainly intentional because initially mortgages were really a preserve of the high income and the middle upper income people. So in order to push financing down market, we capped the loan limit to 10.5 million shillings. So for any house that you identify that you'd like to buy, it has to be within the limit of 10.5 across the country. The repayment period is up to 25 years. So considering that we have a wide array of financial institutions providing this product, you'll find there are some offering 20, others 25. And of course, this one is dependent on your retirement age, which is 60 years. So if you're 50 years today, you can only get a mortgage of 10 years. If you're 40 years, you can get 20 years. The limit, of course, is dependent on your retirement age. However, the repayment period stretches up to 25 years. The interest rate is single digit, and that's our value proposition, and it's fixed for the entire duration of the mortgage. So no matter how the economy is, I think just recently we've come out of a very volatile environment, which was characterized by different macroeconomic changes, which tend to have an effect on interest rate. The best part about the KMRC loan, it's fixed for the entire duration. It doesn't matter whether these changes come about, whether the CBR goes up again. The interest rate you get today when you go to HFC will be fixed for the entire duration. And that is really important because you have predictability of your repayment and you don't have to worry about your repayment going up. And we've seen a lot of uptake as a result of this. The loan to value, we aim to support Kenyans fully, and we do understand their economic challenges, which may prohibit you from getting either a down payment that was previously requested for. So we even tend to support our financial institutions by encouraging them to increase the loan to value ratio, which we accept up to 105%. And this is mainly to cover the costs that are mainly associated with processing a mortgage. And these are, for example, like the legal fees, the valuation fees, the stamp duty. We know the stamp duty is such a huge cost to a borrower, and it's normally 4% or 2% depending on your location. So to cover those exorbitant fees, which may not be a preserve of the borrower, the financial institution can actually support the end borrower in that home ownership journey. The property has to be a clean title. It should not be encumbered, and the minimum unexpired lease should be 40 years. And of course, we do advocate that it has to be insured, and this one is just a normal course of any mortgage that is processed by any financial institution. So we have a wide array of financial institutions that you can choose from. We have 11 Saccos, we have 8 banks, we have 1 microfinance institution, and just recently we even opened it up to include additional financial institutions. So wherever you're banking or if you're in a Sacco, please approach them and ask them, are you participating in this KMRC product offering? And if they're not, please visit our website and get to see the member institutions who are currently providing these KMRC products.
I want to address one small query that you often get, and I've seen a question like that on the timeline. Single digit, how do they manage this? What is the trick here? Are they getting me in at a lower rate and then they hike it at some point? So that's a concern. Kenyans are used to being tricked. So they are wondering, are single digit rates actually possible? What's your response to that?
That's a very good question, Mukaya, because we've actually received a lot of questions from the market, still not believing, is this single digit mortgage available? So how we've been able to achieve it is through the sources of funds that we have. We get funds from development finance institutions, and this is World Bank and African Development Bank. And I'm sure you're aware that these DFIs don't lend to financial institutions directly. So it's actually a sovereign debt. It was negotiated on our behalf by the government of Kenya, and we are able to access that debt through the National Treasury. We accessed the debt at 4.5, and we are able to add a margin of 0.5 and extend to HFC and Stima Sacco at 5%. And of course, to also enlarge the scope of funding that we have, because we want to increase the resources that we have so that we can make the business sustainable and also do it for the long haul. We actually went to the capital markets early in 2022 and raised a corporate bond. And as a result of that, and considering that corporate bonds, of course, come at a certain price, since they are benchmarked against the treasuries, we adopted a blended form of financing so that we can enlarge the scope of funds that we have. Ideally, we have concessional funding at 4.5. Then we have our corporate bond at 12.5. And blending these two resources, we are able to reduce our weighted average cost of capital. So it slightly increased to 5.1. And as a result of that, we increased the cost that you're lending to PMLs from 5 to 5.6. So yes, it's achievable because the financial institutions are getting concessional funding from KMRC. And this concessional funding is fixed for the entire duration that we are providing to the financial institution, enabling them to pass on the same benefit to the end borrower. So it's a disruption in this market. It's the first product of its kind in this market, and it's available to Kenyans to actually tap into these resources and buy homes. So yes, it's actually a possibility, and that's the way we are achieving it.
I'll come to you on the step-by-step process. Let me give you a bit of a break. Shadrach, are you here with us?
Yes, I'm here.
Finally, you can tell us a bit about who you are and where you work at, and then you can tell us the link between Saccos and KMRC, because I think that's a new angle which a lot of people are not aware of.
Yes, thank you and good evening. And apologies. Shadrach Etale, I work for Stima Sacco. One of the critical things that we do from the Sacco perspective is to meet the members' needs. And critically so, one of the things we discovered from our members is that tendency to take facilities. Most of the time when you investigate the purpose of those facilities, is actually they are doing incremental house construction. And so then there was a serious need for us to be able to address that need from the Sacco perspective. And so then getting the liquidity has been a challenge, especially most of the Saccos, because the funds that we have are short-term. And for us to be able to lend long-term, then we need something to be able to unlock that particular space. And so the coming in now of KMRC did that for us in terms of being able to get affordable funds and of course being able again to lend them long-term, to be able now to fill in the mortgage space that has been lacking for quite a while. What it does to a member, it gives them the convenience to be able to repay the facilities in affordable manner. And we are happy to be one of the Saccos that actually playing big time in terms of this particular space. Currently, we have been able to disburse more than 700 million to our members to be able to purchase houses and also are able to construct. And this we do, even the diaspora client, we have a big chunk of diaspora clients who also benefit from this particular facility. And we have ordered and organized structure, just a full department to be able to address the diaspora and be able to get the needs and be able to fulfill what our members need. And so it has been a great engagement, especially with the coming in of KMRC. Thank you.
Thank you, Shadrach. Flo, back to you. What's the process now? I want a mortgage from KMRC or to be refinanced by KMRC, but I can't come directly to KMRC as I'm aware. So where should I go and what's the process?
As I mentioned earlier, initially we were providing this liquidity to financial institutions who are our shareholders. However, just recently we opened it up to accommodate more financial institutions. So when you visit our website, you'll be able to see the 20 financial institutions who have already accessed KMRC funding, and you can select one of them. And once you walk into any of those financial institutions, please ask for a KMRC-backed home loan. And two of those financial institutions are actually here with us today, and that is HFC and Stima Sacco. And these are actually one of the leading financial institutions offering this KMRC mortgage in this market. Of course, prior to that, you would have chosen a residential property that meets our criteria. And that is a property that is 10.5 million and below, and worked to this financial institution for financing. if you've not found a property that is within that criteria, we've also seen a situation where the PMLs have gone an extra step to source for the supply or help you identify where the supply is. I think HFC is large scale on affordable housing supply, so they can even support you by showing you the wide array of properties that they have, which is within our criteria. So you just identify yourself as a Kenyan citizen, which is by provision of a national ID or a passport. And there are different requirements that the PMLs ask for just as part of the credit analysis, which is income verification, whether it's payslips or bank statements, or proof of cash flows if you're in the informal sector. There's the property details. And of course, the property has to be valued in order to be able to give the PML that assurance that in case you default, they'll be able to recover their funds. So the value of the property has to be aligned. There's also the legal due diligence where the PML has to confirm that this property is titled and it's a clean title, it's not encumbered. So there's the whole legal review that is normally done. And the best part about acquiring a mortgage through this financial institution, you're actually covered in terms of risk when it comes to either, we've seen so many situations in the market where properties are either brought down because they're sitting on public land, or a building has just caved in because of bad structural issues, or it was not approved by the local government. So the best part about acquiring a mortgage through these institutions is that they actually take the credit risk. They do the review for you. They do their due diligence. The valuation is done to ascertain the exposures to environmental, social risks, compliance risks. So you're ultimately covered when it comes to a lot of different environmental and social exposures. It's really important for Kenyans to know that this product is available and a lot of the risk has been taken up by the financial institution. So once you provide all those documentation, of course, the bank will proceed to approve your loan, and as the loan facilitating now the property purchase, or whether you're constructing, they will disburse the amount in phases until the construction is complete. So ideally, that's the process, and these institutions are available on our website in case the bank you're banking with or the Sacco you're in has not approached us for liquidity.
And of course, you're expanding the primary mortgage lenders as much as you can. I know like a couple of months ago, there were fewer. Now you've expanded a bit more. You're evaluating more institutions along the way.
Absolutely. It's now open to any financial institution. So we are currently boarding Sacco or any bank. For Saccos, it has to be a deposit-taking Sacco, or any bank that has created the KMRC product.
We are almost coming to the end of the conversation. It's a very engaging one. So I would want to ask you, if you are listening, if you have any question that is burning just below our pinned tweet, you can type a few questions. I've seen Sakata too, who say that he is actually a beneficiary of a KMRC loan. I've seen your question. I will ask Flo a bit later in the conversation. I see a couple of questions are coming. We'll take note of them and we'll ask them very soon. I wanted to move to Stella and perhaps Shadrach after that. You can tell us a bit about, if someone is in the diaspora, how do they pay back the money that they owe? Do you have arrangements for them to get money from abroad and be able to make their payments to you? And if a loan default happens and maybe a delayed payment happens, how do you deal with that for a person in diaspora? Stella, first.
Can you allow me to go back, then I can come to the two questions that you've asked me? I asked her about the step-by-step process. And I may say the whole process takes approximately 90 days. However, we've seen that process taking longer, reason being for factors beyond the financial institutions, or we say like factors beyond HFs. Maybe to be able to elaborate, that process is a 6-step process. And the most critical is to have your income documents as well as the property documents. But property, for the bank, like HFC supporting you to be able to find that property, we will be able to provide. Then for you, for the income, you could be either employed, self-employed, you're in the diaspora, you're employed, you're self-employed, you're in business, you're in contracts, we're able to support you. So don't feel as though we are only looking for people who are only employed. Even if you're self-employed, and I know quite a number of Kenyans in the diaspora are self-employed or they're on contracts, and actually most of them are on contracts, we are happy to be able to support you. So the first step is finding that property. If you don't have that property, at HFC, we're able to support you through what we have or through developer boarded. Then once you submit your documents, it's critical to be able to submit all the documents. That ensures that we have a better turnaround time to be able to give you the offer letter within 3 to 5 days. Then from that, we give you an indication to accept that offer letter, which you should be able to accept 14 days. And all this is to ensure that we're able to fast track the process as fast as possible. Once you accept the offer letter, we progress to valuation of the property. And the reason why we need to ensure that there are no encumbrances, and I'm happy that Flora has been able to highlight this pretty well. The longest time is at the legal stage, which we also call conveyancing. And the reason why it takes a longer time, it's because we're involved parties, that's the lawyers. And the reason why the lawyers come in is to be able to charge the property. Charging the property is whereby the property will be owned jointly with the bank and it will be in your name, but written charged to the bank. The bank is going to hold that title for as long as you have a mortgage in this institution, like say at HFC. Then from charging, you go to the registry, the to your name, and all that takes approximately 40 to 60 days. That's what it takes the longest. And we are hoping with our visas are coming up and the changes happening at the lands office, this process can be able to improve. In other countries, this process taking as short time as possible. But we hope one time we can be able to do business. The whole process should be able to take approximately 30 days. And then once we're able to disperse the loan and move in to the property. So I go to a question, Mukaya, where we asked that to Diaspora, how do they pay their money? One, we support them by opening the account back here in Kenya, and they can be able to send money through our correspondent bank, as well as also through other platforms. We have quite a number of payment platforms that they can be able to send money, and some of the platforms that are very, very efficient, and all what you need to do is to be able to send the money in the country. And for instance, in case of loan default, as a bank, what do we do? One thing that we encourage our customers to do is keep your a relationship manager close in case of any financial constraint. They're able to understand and even be able to guide you on what to do. So in case of default, you'll note that a foreclosure is our last a resort. We support our customers by either restructuring the facilities, and please encourage our diaspora customers to be able to maintain, where possible, maintain 2 times of your advance repayment in your account. And some of this money you can be able to deposit in some of the accounts we have that we are currently paying competitive interest. So you know that you are preparing to pay for a loan. However, you've put some money aside to be able to support you in case of any time you experience constraints. So it's important for one, in case you feel that you have financial constraints and you feel that you may not be able to pay, your relationship manager. One thing, our relationship managers, they are well equipped to be able to ensure that we are able to demystify the full process and even to be able to handhold our customers post disbursement. You are still able to be able to work with our customers and to be able to guide them on their growth as time they have any constraints. So do not shy away to engage your bank or to engage like HFC in case you fall back or in case you're experiencing financial constraints, because our core business is not to foreclose, it's not to auction a property. Our core business is to be able to support all that property that you have dreaming about. And it's all about empowering you to be able to own a property, and you note a property appreciates in value. So today, if you buy a property in 5 years, 10 years time, with an appreciation level of in between 3 to 4%, you find that now property has been able to appreciate. And then maybe for those 20 years, if you take a loan with us, like for 20 years, someone can easily say 20 years is a very long time. Also encourage our customers, if you're getting lump sum amounts of money, you can be able to clear your mortgage early. So we do not penalize our customers for putting in lump sum amounts of money or for paying in their mortgage early. So I know I've covered that widely, Mukaya, but I just wanted our customers to understand the process, and in case of default, and even the measures that we have to support them in property ownership.
I think one thing that is a lot of people don't know that before you default, or if it's likely to default, come talk to your relationship manager as quickly as possible. So there are solutions. Do you agree with that?
Absolutely. That's the truth, Mokaya. And that's why I say always keep them in case, so as such that in case you get any constraints, they can be able to guide you, whether you can restructure the facility, we can reschedule, and we also have other packages that can be able to support our customers before we get to foreclosure. The reason why sometimes Mokaya makes it to foreclosure is because maybe the customer is not engaging the bank, or you haven't advised the bank. Maybe you could be going through financial issues. And even sometimes we also guide our customers. The instance with that maybe you are going through a financial constraint, we even recommend maybe selling through private treaty rather than going through the foreclosure. Private treaty is whereby we engage you to sell the property at the market value, And for instance, if the property was valued at maybe 10 million, you sell at that 10 million, and if your loan was 5 million, you're able to clear that 5 million and you have some extra money to put into your pocket. So we have quite a number of packages that we support our customers, and foreclosure is the last resort. And it's not our core business, and we are not happy to go there.
People have a lot of scars from the 90s of a lot of people being thrown out of houses and all. So it's very important that you clarify that. Shadrach, back to you. Saccos, how are they supporting people in diaspora? How's it been like in terms of the people in diaspora and their uptake of affordable housing solutions?
We have a wide array of solutions in terms of how we support the diaspora people. And as I said, one of our branches that is really growing is actually what we refer to as a diaspora. That's why we have formed up a team, formed up a department. The main role is just to address anything that comes from the diaspora. And so we have a pool of trained staff who actually are able to take our members through the entire mortgage process. One of the key things you discovered is even before the members come in to do the application, it's critical that they actually exposed through the process so that now all the questions are raised, they are addressed, and members are directed in terms of how best are they able to begin the mortgage process. And when that one has already been done, then the process becomes very seamless. In terms of remittances, we have a number of them. And depending on where our members are, because we have members in the US, in the UK, in AU countries, we have NALA, we use that one in those particular areas. We have Pesa Direct, we have SendWave, and we also have M-Pesa. One of the things that happens at the Sacco is you have to save most of the time. So we'll find most of our members are able to save through those digital platforms. They're able to accumulate their savings. The same way they do that, then they're also able to channel their loan repayments in terms of paying those specific loans. And one of the things we also agree with them is they need to understand their contracts. They need to have all the documentation that are required. If they offer letters, they need to know how much are they paying, when are they paying, and which is the most convenient way of being able to remit those funds so that we are able to avoid issues of delay and also issues of non-repayment. And in the worst case scenario where we have to experience a default, we have a very robust system, a schema Sacco, and we're able to identify any cases of non-payment early enough. Once we identify those cases early enough, we're able to follow up with our members, be able to remind them, be able to find out what could be the issues that are coming up. And then we're also able now to prescribe a number of solutions to them. Do they need a restructure? Do they need a rescheduling? What could be the issue? So we have a number of things that we're able to address just to ensure that our members are comfortable wherever they are. One of the things that we pride ourselves in is that all the diaspora members that we actually lend to in terms of affordable mortgages, most of them are repaying, and it's a very good market for us because then it helps us now to be able to refinance more members and be able to bring in the funds that are required. So we opened up the platform and also engage our members and request those who are our members, those who would love to join and be members of Schema Sacco, that we have all those options that they're able to make use of to be able to repay their loans and to be able to take care of any issues of default in the future.
A few more questions come in. And perhaps before I switch to that, maybe any of you can handle these tax implications, legal requirements, perhaps, and financial risks that may be specific to diaspora people they should watch out as they take affordable housing solutions. Are there any things that you should look out for? Top of mind, Flo, Stella, or Shadrach? It's an open floor on this question.
I think I'm the PMS to handle this, considering that they deal directly with the
Stella, any top of mind quick thing that diaspora people should specifically look at? I know you emphasize the issue of documentation and using professionals. Anything that you may have missed there before I go to the questions from the audience?
The most important thing that our diaspora customers need to know is that, and even to be aware of, if you're getting into property ownership, they need to be aware of the incidental cost or the other costs that come in with property ownership, and need to be able to understand the property ownership. Then, and if they don't understand that, they mystify. So some of these incidental costs or other closing costs, they usually range in between 6%, and this is like a stamp duty, which is at 4%. We have the legal fees, which is charged according to the lawyer scale. We also have the valuers fees, which are charged according to the Institution of Surveyors of Kenya scale. So for this, they should range to 8%. And it's important anytime you're getting into property ownership journey to have this in the back of mind. And what we usually encourage our customers is, like at HFC, we finance our customers in between 80 to 90%. And the reason why we do this is because we note that when you're borrowing a lower amount of money, you're able to pay less amount of money, and also it eases your burden. And also, if you're able to save towards home ownership, supports you to be able to get into that property without much strain. Because we've seen the higher the financing, the higher they are, the higher the repayment. So we encourage our customers, if possible, try and put in more equity contribution towards a property. So it's good then to be able to pay incidental costs.
Shadrach, do you have anything to add there?
Yes, that's very true. One of the things also is in terms of maybe if you're doing a house, maybe it's the period around completion. And I think one of the supports we give to our members is to walk with them through that journey, because sometimes it becomes a challenge if the construction begins, it does not end on time. And because of the issues of inflation, increase of prices of those materials, that becomes a big thing. Now, at the Sacco, we have several other options that help our members in terms of being able to do that. Because once we have agreed in terms of this is the duration that the project should take, we fast track that with assistance of our capable service providers, just to be able to ensure that once you begin your house, you're able to finish it on time. In case of any funds that probably will be required to be able to complete that, we're able to provide that one on time, just to be able to take care of those increases in prices and the issues of inflation.
Quick question here. One is elaborate more on mortgages for construction of home. And the second question is from Sakata 2, who's asking, he took a KMRC loan from a bank for the construction of his village house, but he had to give security. So he's wondering, should people really be requiring security in this regard? Because he says the village house may not have market value. So two quick questions, open for any of you to take up and handle them.
Maybe I can be able to respond to the question on the security for the village house. And this is how I can be able to respond to it. Anytime you're taking a loan mortgage, there are two critical things that are required by a bank or by a financial institution. They say even one of the things that you require is your income and property. Your income is to be able to confirm on the ability to pay. Well, the property comes in the security. So the reason why maybe the particular financial institution requested for a different title for the village house, it's because as a financial institution, we finance properties within the county headquarters, or what was normally known as, before devolution, what was called the municipalities. So the properties need to be within the county headquarters or the municipalities, and we may not finance a property in the up country if it's not within the county headquarters, or if it's like an ancestral property that we may not be able to take as a security, because of even in case of default, becomes difficult to be able to realize an ancestral property. It's not easy even for a financial institution to realize an ancestral property, because these are properties that are blended from one generation to another. And even you find that even for these properties, sometimes there are no rent. So the properties need to be within the county headquarters.
Shadrach, did you have something to add?
Yeah, the first question was about the construction mortgage facility. And one of the things we have also discovered from our business of lending is that most of the members will want to get a facility for constructions as opposed to purchase, simply because they're able to tailor make to their tastes and preferences. That is very critical. Now, what happens if that's what you want? Number one, you have to construct a house on land, so ensure you have a piece of land that has ownership documents. That is very critical. If you come at the Sacco and you have a land that has either title deed or certificate of lease, then the Sacco is able to give you 100% in terms of constructions. You have to know the cost of that house. If it's a bungalow, we need to have a QS give us the bill of quantities. And if it is a mansionette, then ensure you have structural drawings from an engineer, qualified engineer. And of course, the process begins with an architect giving you also the plans. And all those things have to be approved. So we have to get approved the structural drawings by the engineer. The architectural plans also have to be approved, and the bill of quantities. And we have the ownership documents for land. You can count with the Sacco plus the other documents in terms of income that we're able to evaluate. If the project is 10 million, then we're able to check whether we're able to repay the 10 million. and then we begin with it. Now, at the Sacco, we'll give you at 9%, and as you said, the maximum is 25 years, of course, now depending again on your income. So what we'll do is once everything is done, the charging process is complete, we'll start disbursements by tranches and we go different levels. We'll start with the foundation. We check is okay. We move to the walling stage, go to the roof, up to the point where the house is done. The Sacco is able to give you in small tranches. You're going to inspect to ensure there's quality in terms of what is happening. And once the house is complete, then you have now to live in that house, pay the facility until completion. Then we shall be able to discharge the Sacco, and now the house becomes plan. So that is a brief process in terms of how we go about construction loans. Thank you.
Probably just to add to what my two colleagues have said, when you look at a mortgage, especially in terms of the size, the ticket size, it's really quite huge. So these financial institutions are actually taking risk in order to give you that 9% interest rate. So it's really important that they secure themselves in order to protect their interest in case the borrower is not able to meet the obligation. So a security is really important because you as the borrower, you're likely to pay your loan on time because you will risk losing that property if you default. Can you imagine a situation where mortgages were unsecured properties? If the defaults were so high like the way they are right now at 16%, it will really affect the financial stability of these financial institutions. So they are actually taking risk in order to be able to give you that 9%. And that's why security is very important whenever they are financing you for a mortgage.
I'll give you a chance to give closing thoughts, but one quick question here. I think for the same guy who took up a loan from KMRC is wondering, are Saccos conflicted in terms of offering their own solutions or coming to KMRC? And perhaps, Flora, you can answer this. Why are financial institutions not pushing a bit more the single digit mortgage rates so that people can be more aware? For me also, personally, it's only in the past year or so as we've engaged KMRC that I've been able to be made more aware of these single digits. So perhaps you can tell us a bit about that. Maybe you can start with Flo and then Shadrach, and then Stella, if you have anything to add on that.
I'm really excited to hear that someone from the audience has benefited from the KMRC loan. It really gives that fulfillment that as we are seated back in our office, this financing is creating an impact for Kenyans somewhere. There's really been a lot of awareness being created, and we continue to create awareness about this KMRC product. And probably just to elicit you in a conversation more, when was the last time you thought about buying a home?
I have thought about it recently myself.
Have you ever realized if you decide, for example, to buy a car today, you'll start seeing the kind of cars you're interested in buying on the road as opposed to when you're not interested? What I'm trying to communicate is if you're really looking to own a home, you will see the visibility of this KMRC product because we are constantly on our social media platforms. You are constantly in the newspaper. It's something that we do on a daily basis, creating awareness about this KMRC product. And we've partnered even with financial institutions to be able to spread this awareness to Kenyans. Yes, they are still offering the market rate product. However, the affordable housing product is also being offered. And we've seen a lot of prioritization because of the advantages that comes along with the KMRC product, of course, being fixed and single digit, which is something new in this market. We continue to create this visibility and we will keep enhancing it. It's part of our strategy for the next 5 years to ensure that as many Kenyans as possible are able to know about availability of this financing that can accord them a home. I think I'll leave it to my two financiers to also talk about the visibility and how they are creating awareness in this market to enable Kenyans to know more about this KMRC product.
Stella and Shadrach, anything to add there before I pose my final question to you guys?
Maybe what I can be able to say is for HFC, what you're using is the opportunity that we have, and we are having these discussions here. These discussions is to ensure we're available, we are visible, we are supporting our customers. As Alan mentioned, is that we were the first financial institution to access the funding from KMRC. We've seen quite a number of Kenyans accessing loans, and for us, we are happy to be able to support as many people as possible because our purpose is enriching lives and enriching lives through empowering you to be able to own that home. We are happy to be able to engage as many Kenyans as possible locally in the diaspora to be able to own property that you have been dreaming of. And that is why we are here. And that's what Flora said. This gives us fulfillment when you see a customer owning a property.
Sandra, one of the principles of the Sacco is member economic participation and also member education and training. That's why actually this season we are doing extensive training. And of course, one of the things we are doing is economic empowerment by ensuring that our members are able to know what we offer. And one of those best products that we are selling, if you look at our billboards, if you look at our digital platforms, if you look at our marketing events, it's single-digit interest rate to be able to own a home for as long as 25 years. That is very critical. I know we may not have done as much, but the truth of the matter is that's what we do now. As a Sacco is a welfare of the members, not so much about returns. And that's why when we see our members getting lower rates, affordable rates for a longer period of time, is actually our joy, because Saccos, we give back to our members because those are the people that matter to us. So we keep pushing, we keep talking about it, we keep shouting about it, that we have many other products, of course, at the Sacco, but this particular product is actually transforming lives. And everyone is welcome to be a member and participate and be able also to enjoy what the other members are getting. Thank you.
Specific to Flo, 2 questions here. Someone has asked 2 Saccos whether they partner with you, and they've said no. I think we've given them a list of the 20 institutions that you partner with. You are in the process of expanding to more Saccos. Could you clarify that to people so that they can be a bit more relaxed? So I think some Saccos are saying they don't provide. And the second one is they're asking whether you should have uniform policies for participating institutions. It says one of the banks that you work with has been asking for income eligibility criteria to make sure that you qualify. So, but do you have uniform policies across the banks, or is they different? And the banks and financial institutions?
Thank you, Mokaya. One of our key objectives in this market is really to ensure standardization of mortgage lending practices among all our member institutions. And yes, we do adopt uniform policies across all our member institutions. So the guideline that we've given to our primary institution at the moment is single digits. It's really an agreement with financial institutions. We really don't prescribe or impose that single digit. It's really an agreement between the financial institutions and KMRC that this benefit needs to be passed on to Kenyans. And that's why they've been issuing single digit mortgages. Same thing on income requirement and same thing on the loan limit. So we remain agile and we keep evolving from time to time. So some time back, when we established the institution, the loans were initially capped at 4 million. This was initially aligned to the affordable housing program that was in existence at the time. However, when it comes to practically implementing the product, we realized that some of these properties do not exist. And we got a lot of feedback from the market and also from our financial institutions. And we were able to review that loan requirement from 4 million. We went to 6 million. And now we are actually at 10.5 million. Same thing to the income limit. It was initially capped at 150. We took it up to 200,000 due to various factors like inflation having eroded the purchasing power of many Kenyans. And now we've removed that income limit. So we give that advisory to all our primary institutions, which is standard across all financial institutions. So the KMRC, where we stand as KMRC, those requirements apply uniformly across all the financial institutions that are accessing KMRC funding.
I want to give each of you a chance to give your closing thoughts. I'll start with Shadrach, Stella, and then Flo. You can also tell people where they can find you and such kind of relevant information as they are to your various financial institutions. Shadrach.
Thank you. I think it has been now a wonderful engagement just to be able to share some of the things that we do, especially in Stima Sacco. And our intentions is to transform lives and transform communities. And that is the story why we have products that reflect the members' needs in terms of mortgages, especially people in the diaspora. Right now, the mortgage space has been demystified, coming in the space, the Saccos, and it's a lot more easier and it's more gently in terms of having to borrow from the Sacco. And so just to encourage people to come, join, look for us in our pages. We're there, stemasacco.com. Come to our offices at Backlands to inquire, and you'll be helped in terms of getting personalized information, in terms of how you are able to own a house, either through purchase or through constructions at very affordable rates. And right now, information is out there, and we are more than willing to be able to assist any person who want to come, join the scope, and let their lives also be transformed.
Thank you, Shadrach. Stella, over to you.
Thank you, Mokaya, for having me this evening. One thing I can say is one or two things is that at HFC, as I said earlier, purpose is to enrich lives and to enrich lives through financial empowerment. So we are here to be able to empower you to be able to own that property that you've been dreaming of. Do not shy off to walk into one of our branches or even to call. For our diaspora customers, we have our diaspora banking team as well as the mortgage business team to be able to support you to walk that journey. Don't think that owning a property or the mortgage journey or the property ownership journey is difficult. We will be able to demystify and make it easy to handhold you. We have about 24 hours, 7 days contact center, be able to support you to own that property. And then the thing is that we offer all our solutions under one roof. So we'll be able to come in, we'll be able to get a property, we'll be able to get finance, as well as be able to get other full banking services. So currently we're offering other full banking services to do shy away to walking into the bank. And I know one of the things maybe I can be able to respond and make it short is on people keep on asking where is the supply or where are the properties. The properties are there in the market because we have seen quite a number of developers who have come into the market. And maybe why something that we'll be able to aware of is that the government is offering concessions to developers who are putting up affordable houses. If you put up more than 100 houses, one is able to get benefits of like corporate tax and quite a number of other levies when somebody puts up affordable houses above 100 units. Then we have the fixed rates and for a maximum time of 20 years. So don't shy away, walk in, and we'll be able to support you to own that property. Thank you very much.
Flo, you can give us your closing thoughts and where we can find all these wonderful solutions that you offer.
So thank you so much, Mokaya. That was a very good engagement. The main purpose for us really is to create that awareness in the market that this product is available and to encourage as many Kenyans as possible to take advantage of the solution to own a home. KMRC is paving the way by providing this long-term financing. And we've seen financial institutions being very innovative in terms of even how they provide some of these solutions. And that's why we are really opening it up to encourage as many financial institutions as possible to be able to access KMRC financing, because we'd like to give you a wide array of financial institutions to choose from. So if you don't feel comfortable where you are, you can easily walk to another financial institution and be able to get that product which you feel is convenient and being offered to you at the most convenient and efficient way. So to fully leverage on some of these opportunities, and we encourage the public, especially the diaspora clients, to stay informed, collaborate with the trusted financial institutions that you have to be able to access this product. We provide a lot of information. We have details on our eligibility criteria. We have details on the home ownership process. We even have a frequently asked question. Just visit our website on www.kmrc.co.ke. Get to ask us questions. Please reveal the information that is there. We've provided a platform where you can ask as many questions as you can. And even if you feel like you want to visit our office, we are located at Old Mutual Tower on 27th floor. Please visit us. We will help and support you through your home ownership journey. So thank you very much, Mokaya. That was a very good and engaging discussion.
I've seen a note on the timeline from Candy who says she has learned so much on this space. I think I join her and many other people in saying that it's eye-opening to actually hear that there are single-digit mortgage solutions in the country. So I think KMRC and the partners from Sacco and HF, really good work in terms of elaborating on these wonderful products. You've had their contacts. Please reach out to engage a bit more and get more information on this. Until next year again, when we host again another space on affordable housing solutions, look out for more spaces like this with KMRC. We hold one each quarter. If you want a recap of some of the other spaces that we've held, you can check them out on our podcast, on Mwango Capital Podcast. You definitely get them there. So from Flora, Stella, and Shadrach and I want to say thank you so much for joining us today.